Good afternoon and welcome to the Daily FX Roundup with ForexAnalytix. And we are seeing a little bit of a movement today as we get on the precipice, if you want to call it, into Jackson Hole, seeing the dollar back off just a bit. This has been our bias chart resistance for the last couple of days, 98.42. You can see it right here. We struggling to hit. We popped just a hair bit above it. Which actually coincided with, I think it's some resignation announcement out of Italy. I'm not going to go into all the details on that. I mean, that stuff is, they'll never get their act together ever with his budget, politics, whatever. Anybody that knows anything about Italian politics knows that it's like a sausage making factory, just a bunch of mess. But anyway, that being said, we popped up here and that coincided with the euro taking out the lows. And then we turned around and came back, and it's this 98.42. We talked about it this morning in the European crossover webinar. We said, hey, look, you may start to finally see this thing pare back going into Jackson Hole, because I think that my take is that there were some concerns whether Powell will be, accommodated. Look, he has no choice. I mean, it's not even about the the Fed's independence versus what Trump wants. This China route is not going to end anytime soon. I've been saying that since Moses crossed the desert, okay, for literally months and months and months. People kept buying this thing that China was going to reach some kind of deal, and it was told you it was never going to happen. But it only intensified worse with Trump's little tantrums and adding that there'll be more and more tariffs and more tariffs. And he's kind of backed away from that, so he looks kind of weak doing that after he proclaimed it would be in place. But that being said, we could really start to see a real good slowdown. We've seen that in different economic indicators or purchasing managers indexes. And with that, we would see a pretty good little pullback, even though we've already seen a little bit of pullback here already, but with the S&Ps. And so I think at this point, they have to be accommodative, if nothing, just to cushion the pullback that we may ultimately end up going and seeing. So I think that they are going to be accommodative. There's nothing to, for a reason for him not to be. And I'll tell you why also is I've already seen in some of the notes or research, they said, hey, if he's not as accommodative, the dollar's going to take off. Well, that's just, cutting your nose off to spite your face, because if the dollar takes off, that's just going to increase the woes that we already have from China with the increase in tariffs. So like I said, it's just going to make things more difficult in that sense. It's just going to, like I said, it will just cause a further slowdown, because companies aren't going to be able to go in and ship anything out. I mean, the global economy is already slowing down, but what I'm saying is, as a byproduct of that, it's going to make it even more difficult for U.S. companies to go in and sell products abroad, and already a weakened global economy, if now they have to pay more for those same products because the dollar is so high. So I'm just saying is that if he does that, the dollar is going to go in and take off. And if the dollar takes off, it makes it very, very tough for multinationals, and that's just going to go and intensify the slowdown. And then what happens is, in the S&Ps, at least my take is, the S&Ps end up pulling back quite a bit, and then he ultimately has to take action and then loses credibility in the meantime. So no, you got to, and on top of that, this is with all the other central banks, especially the ECB over there. I mean, if they could go beyond zero, and I'm not talking about a little bit beyond zero, because they're already beyond zero. If they could go to minus 1,000 basis points, they go to minus 1,000 basis points. That zone is just in the hole, and it's never going to pull itself out. Okay, the one engine hub, Germany, was the one thing that was keeping that going and still going, and Germany's already been sliding back. So once again, like I said, it makes no sense. Basically, if Powell were to not be very dovish, it could really set the dollar taking off, and really would open up the door and cause a whole bunch of trouble. So I simply just don't see that. And my take was, since earlier in the week, actually Tuesday, I was saying, and actually on Friday in Face, when we're down there 1075, I said, hey, look, I think the year is okay. I think we'll bounce up. Now, I'm not saying that we're going to take off, because I think it's okay to get back to 1060-70. Now, it'll take that catalyst, and the catalyst is going to be not if Powell's dovish, because I think he'll be dovish, but to what extent he's dovish. And if he is reasonably dovish, you know, on spot dovish, okay, which I think he will be, or showing basically that it's not, doesn't have to be dovish, just it's showing that the Fed's going to be, you know, accommodative to any pullbacks. There's a whole lot of uncertainty, blah blah blah. I don't think the dollar's going to turn around and sell off 300 points at all. I mean, if you're looking at the euro, I think all it does is allow the euro to get up to about 12.20 if they do that. Maybe we'll get up to like 12.50, maybe in that particular scenario, but the euro has so many woes, and the dollar ultimately will be bought back, but it probably would allow the dollar to come down and challenge about this 96.50, maybe get a little bit beyond that. But we're already seeing the market pare back going into it. So even though we were strong this morning, once again, traders know, hey, look, that's the risk going into Jackson Hole. Whether you believe it or not, that's the risk. So, of course, they're going to pare back some. So we've seen that. We've seen the euro step down to these lows here and turn around and reverse around a bit. And we have seen the cable move up higher. Actually, across the sterling pairs, we've seen a move that has to do with Merkel talking about potentially, you know, a backstop here. You know, in regards to the Brexit. So, you know, once it says, we'll see whether or not that, I mean, that's also allowed, that actually has allowed a little bit of a bid to go in and come back in. And there was some talk here, hey, look, it's basically model-based buying, whether coming in, well, model-based buying or not, we have seen the the cable come off of those lows. Bear with me, cut that out. So you can see here, we're coming up here to the resistance, which is 21.65. We did get above it, but we need a 2-hour close above that. Just as I was mentioning in the chat room, if we can get a 2-hour close above right there, 111, we can get things starting to motor on. Now, I think this 2-hour bar here, you know, is a nice shakeout here on that dip, and then for us to come right back up. And we did close above this area here, but for us to, you know, and that kind of like, kind of took away the downside action as far as new shorts being put on. If they were stopped in, now they find themselves on the wrong side, so probably have to cover, give us a little bit more juice. But we need a 2-hour close. We can get a 2-hour close above 111. It opens the door for us now start to look for an eventual move, maybe going into Friday, to challenge that 1150/1160. Actually, it's 1160/1170 there, and I think we can get there now. The catalyst to move beyond that is going to be to the extent that Powell is, if you want to call it dovish. I mean, I would not call it necessarily dovish. I'd say to the extent he is showing that the Fed will be accommodating. And I think that makes sense. The other driver here is obviously the dollar CAD. That thing has just been still pushing higher. We had our bias chart today here at right here at 38. You can see the touches coming across here on the bodies, which also coincide with this wick up here and this wick here. If we get a daily a 2-hour close above 33.48, I'm 33.38, I apologize. That'll really open the door for this thing to move higher. You know, earlier last week, I mean, it looked like it was going to set itself up for a test, not a big test, but at least a little bit of a test, and we're simply not seeing that here in the dollar CAD. I mean, we've come right back, jumped right back. Despite we had a decent move up here in crude oil. I mean, it's a little bit weaker now. We took a dip, but still at that time, CAD wasn't as if, you know, dropping even further. Here was, you know, we had our bias chart support from here, but I thought we could slip a little bit further into about the 78-ish, maybe just even a little bit further than that. But we turn around and start ourselves muscle up, pull back, and then muscle right back up again. So we shall see. 33.82 is huge here, but it's already done pretty good just holding up here. We'll see what we can get here with this close. I guess a lot of it will tell us that the momentum actually holding up pretty well if you consider the cash dollar index to start to wane a bit from this bias chart resistance at 98.42. We've had that in place for a couple of days. Short-term bias chart support is going to be 98.02 right here. And really, it's going to be a buy all the way up, all the way down to about 97.60. Okay, and we'll just take a quick run real quick on the cross rates. Well, actually, before we do that, let's go on and take a look at the bund. And you can see that's turned around and jumped right back up. Obviously, it means inverse to yields, so obviously lower yields. But we have seen the 10-year yield also slide back. And I think the 10-year yield is a little bit more to do with, the upcoming Jackson Hole. I think that has. Germany has talked about that they could, do a little bit of stimulus. What they said yesterday was, hey, they felt that the 2008 crisis impacted them by $50 billion, and that they have enough money that they could offset that. Well, you think an economy that big, 50 billion is not very much. So once we get past Jackson Hole, it'll be interesting to see how these two react. We could see the 10-year yield pull back even further if Powell seems accommodative, and then maybe the Bund not as much, or maybe make a move and then maybe try and work back lower. Nonetheless, it's obviously rates are going lower. There's no doubt about that. But this is something to keep an eye on as we close in towards the end of the week. Um, bear with me. We'll go on and take a look at the cross rates. And you can see here that sterling is doing well even against the yen. So here's the guppy, but we need this get this closed above here, above. You can check the bias chart real quick if you want the exact figure here. On the guppy, 29.33 right here. But look at the sterling versus the odd. And we know the odd's kind of like just marking time. Actually, the odd had a chance to even slip even lower, but RBS basically stated, oh, wait a minute, hold your horses. We'll see how things play out. So for the sterling to still be gaining against the odd, at least that's quite a bit, because you can see here that the euro continues to struggle, even against the odd, which the euro had really taken off like gangbusters against the odd. Look at that move. So look at the difference between here from a comparative standpoint, how well the sterling is gained against the odd versus the euro, which we already know the euro's been weaker. But look at this. That would be in comparison to, let's say, us challenging up in here or higher. So we're really pushing up here with the sterling versus the odd. Basically, what you want to look at is basically we're saying, we talked about this on, I think it was yesterday's roundup, is why it's be good to be looking at the cross rates, because one of the things even Blake mentioned, sometimes he'll look at a pair and he'll be looking at strengths or lack of strength across other pairs. So if you're looking at the euro, is the euro gain against the Aussie? Is it gain against the MEX? Is it gain against the pound? Because then that'll give you further conviction, potentially, if let's say the euro is holding up very well and we start busting out, and not only we're busting out, but we're busting out against other pairs, that gives you more conviction to potentially add on, or maybe, like I said, stretch out what your potential target is on that. And why it makes a lot of sense to me, why, even if you don't trade the cross rates, you should go on and start to familiarize yourself with some of the cross rates. Certainly makes a big difference, especially, like I said, even if you're looking at the Canadian pair, same thing here. I don't look at the Canadian pairs very often, but I'm saying if you're trading the Canadian dollar, is the dollar's gained against the CAD, but is it CAD also losing strength against the euro? Is it losing against sterling? Is it losing against the yen? These will help you, like I said, when you're trying to sense the temperature. Okay, something's breaking out, but is it breaking out across the board? We've seen weakness across the board with a particular currency, or is it just happening with one particular currency and specifically, let's say the dollar CAD? Lastly, we'll just go in and take a look at some other pairs, and then we'll mosey on out of here. It's still a relatively quiet August trading day, as we have no data today to speak of here on the U.S. side. So once again, it's all about, as Dale mentioned, it's all about Jackson Hole, especially, last 2 weeks of August. You got European traders on holiday. So just taking a quick look here, we are seeing the euro mix still holding up relatively well. Now, that we did see the dollar peso come back, and it actually has come back down into our bias chart support, which we had 1972.6. I think the low I could check here quickly. Looks like the low was, to pull it back. Not bad, 1972.2, and we had 1972.6. Right now we're at 1976.9 on dollar peso. Swissy, I haven't followed Swissy in quite a while, but I'm starting to keep an eye on it once again, just to get a temperature checked across the board, because like I said, Friday's going to be very, very important. So you want to look at how the dollar's faring against all the pairs. I think it's going to be, like I said, give you that better, I don't want to say understanding, but better perspective. How currency is doing against all the pairs going across the board. Here's the CAD yen. We talked about that. And is the Canadian dollar losing against everything? If it is, then probably gives you a good sense of, okay, maybe there's more follow through with this dollar versus the CAD, especially as strong as the dollar's been. And obviously, the euro versus the pound was trying to slide back because of sterling strength this morning. We'll get back into the main screen. Okay. And you can see here where the peso has pulled back down to our bias chart support here, 1972.6. The low was 1972.2. Like I said, the daily roundup is just basically just a temperature check across the board of the different pairs, and if something's happening in Asia coming up. But as I said, it's pretty light considering it's August. If you want to see more, like I said, once again, I say it, is that you got to consider a 10-day trial with ForexAnalytix. It's only $1. To me, I've said it once, I've said it twice, I've said it three times again, is the strength to me is in the chat room. But like I said, wonderful analysis across the board, including the data flash, which is just about as quick as Bloomberg and Reuters. I use Reuters, Blake uses Bloomberg. Blake says it's maybe just less than half of a second slower than Bloomberg. And that's already included when you're tracking, especially some of these key events, whether it's employment data or central bank announcements. They're trying to trade it, rather quickly and get that information quicker than what you're going to see on, on Twitter. Also, like I said, the different platforms. Actually, I was on the go yesterday. I had to run a bunch of errands yesterday, and I was keeping track of the chat room right there on my iPhone. I mean, so like I said, you have the opportunity, and as well as the prices that I'm saying is I could see if anything was developing. So once again, a lot of great advantages using or trying out at least the 10-day trial with ForexAnalytix. It's only $1. But like I said, we get to look. You can see here the euro's here at 10.98. If we can get a 2-hour close above 111, it will really release some pressure and open the door for us to potentially get up to that 1160, 1170 going into Jackson Hole on Friday. And then we shall see. I believe Powell will be rather accommodating because I think it's going to be important for them to go and do that, if nothing else, just to cushion the potential downside that we're going to go and see. That being said, thanks for joining us here with FX ForexAnalytix, and have a great rest of the day.